Hi. Welcome, everyone. Hello. I'm just gonna write. Arian, loving it. Welcome, everyone, to my conversation with the amazing Arian Simone. If you guys don't know me, hey, girl. Look at that hat. I mean,
Girl, I want to see what's underneath it, honey. I have quarantine hair, and I cannot just come on here any kind of way.
oh, do you see these grays? Look, it's real. It's so real over here. I cannot get to my hairstylist sooner, but this is real talk, and that's what you guys can expect from this conversation with the one and only Arian Simone. So welcome to the next live Priceless Conversation session. This is a digital mentorship program with Mastercard designed for small business owners to navigate the challenges, maintain their business, and focus on the future. And as some of you already know, Mastercard has been introducing an expert of the week each week, where they get asked hard-hitting questions on the Hello Alice Business for All online forum. Then I get to host these amazing experts here on Create and Cultivate live to talk the talk and bring the questions to life. So while we have questions already, there is a Q&A box. Please, please, please ask your questions. Arian is like, I could just listen to her speak for days. She's so inspiring. So this is a huge opportunity for everyone tuning in. So for those of you who might not know Arian Simone, she's the general partner, co-founder, and investor at the Fearless Fund, a company that invests in high-growth, scalable, women of color-led ventures globally. And just a few facts, in 2018, U.S. companies raised a total of $130 billion in VC funding, yet only 2.2% of that total went toward female-founded companies and less than 1% total funding allocated towards businesses founded by women of color. But you are here to change that, so we are so excited to talk today.
Oh, I'm so excited to be here. Thank you, Jaclyn, for having me.
Of course, and like I said, please ask your questions in the Q&A box and I will do my best to get to them. But basically, so you, one, you have this amazing new book out. You recently led a priceless conversation on how to bridge the gap in venture capital funding for women of color founders in growing these amazing companies. And we had a really fun conversation earlier this week where you said the only color, I'm literally putting this on like posters, quoting you, of course, but the only color that matters is green. And the truth is the women of color owned businesses are making a ton of money, and that's all that should matter for investors. So many of today's viewers ask questions about raising money, of course, how to achieve their business goals, and we will highlight all of them. So let's just get right into it.
Wonderful.
Okay, so I'm going to read some of the questions from the Hello Alice community. How do I get venture capitalists to want to invest in me as a minority and women-owned business? I've applied for several grants but been rejected.
Got you. Well, first and foremost, when it comes to grants and ventures, as you and I both know, those are two different areas of funding. So when it comes to venture, to make it very attractive to investors, you want to make sure that you've already positioned your company to have an exit. So when people come before venture capitalists, they want to know, okay, how soon can you exit and what does this look like? So you always want to make sure that you're planning for the end from the beginning. So I would say that is definitely, I would think, would probably be the main reason why somebody might not take a look. Because in the venture sector, we're looking for companies that can scale and grow at a rapid rate. And we're also looking for companies in the matter of anywhere at low end of 3 years to a high end of 10 years that can have an exit with their business. So we need to be able to see that, because at the end of the day, we're getting a return on investment for our investors and LPs in the fund. So you want to make sure those things are in place. When it comes to grants, sometimes those are just very subject focused, whether it's nonprofit, whether it's something they're looking for in social impact. So you want to just make sure that you always have a good marriage. Sometimes people are not receiving funding because the marriage just may not be there. And sometimes people are receiving funding because the marriage is there. It's like, oh, this works. It's a win-win on both sides. What you're looking for funding for is a match to our thesis. So all venture capital firms, they all have a thesis. Our thesis is that we invest in women of color founders at a pre-seed, seed, and Series A level, which is early stage. There are companies, excuse me, that their thesis is just different. So if you're approaching somebody and their thesis does not match who you are, then you're not going to get anywhere anyway. So that's why I say it's always about the marriage and the partnership. You want to make sure that you're always in alignment. So that's first and foremost, because if the alignment is there, then there can be an opportunity there. I'm seeing all these comments. Everybody's just talking about this hat. And forwards that are tuning in, I love you guys.
Oh, I love it. Yes, the hat is incredible. But also, okay, so you mentioned exits. So can you tell us a little bit, because I think oftentimes women build companies without an exit in mind. Can you talk a little bit about what an exit could look like?
Most definitely. An exit is definitely your acquisition when somebody's ready to purchase your business. So you want to make sure that you've also aligned yourself with who the potential buyers could be as well
Mm-hmm.
too. So for that, and honestly, some VC firms, if they see that you have a chance for a strong exit, they'll even say, oh, I know who, there's some potential people that would buy this company out. When you see women, sometimes when they don't have that mindset, it's because we are emotional beings. At the end of the day, we get like
Mm-hmm.
emotionally attacked, we romanticize things. And I'm like, no, at the end of the day, it's you're still running a company. It's still a business. Don't always overextend yourself. But those are just characteristics of us being a woman. But on the pro side, it's also why our companies are doing better than all male-led companies as well,
Mm-hmm.
too. So to say
Girl.
that, but yeah, you want to make that your exit is basically it's your acquisition. Who are the potential buyers for your company? Not all companies are legacy companies where you're passing it down to your child. You're building it up to grow it, to sell it. So therefore you have more capital to go start more businesses or more capital to go invest more money in different places.
Absolutely. And I think that's such great advice. I mean, and it's so true. And like women, get that money, get that exit. Like if you're building something, if you're like, oh, this is a product that this company is going to need in the next 2 to 3 years, but you know, people build businesses for other companies to buy. Like that is part of what they do. And like you hear about this all the time. Men who worked at Apple left, started a tech company that then gets bought by Apple. It's like this is what we have to be doing. So I love it. You are such a wealth of information. I'm going to get to more questions. My goal is to open a nonprofit facility, but it seems impossible to raise the money necessary to finish construction on the facility I want to lease. Do you have any advice on how to gain investors on even meaningful ways to fund or even meaningful ways to fundraise for a small business?
Yes. So I want to say this question came from somebody who was looking for a community center. And I
Mm,
remember looking at it and I told her, and it was an African American woman, and I told her right now what she probably needs to do, especially with the current climate, that she needs to just more so, this needs to be like a grassroots approach. A lot of people right now, when you're talking about funding for businesses, they're getting the community involved. Like right now, Angela Benson, she's in the tech space. She's raising from literally,
crazy.
yes, social, are you watching it?
I'm
Yes, social
watching.
media, yeah, the audience, everything. So there are ways that now people can set up legally to equity crowd fund from the public. So you want to make sure that those are options that you tap into too, because there are people who may not be accredited investors that would love to just join you on that journey.
Mm-hmm.
So you want to out that route. So I remember, if I remember correctly, that's what that lady's mission was. And I said, you know what? You want to use a grassroots approach for this. You want to definitely get the community involved on something like this because it's going to benefit the community in the long run. So yeah, there's so many ways right now that people are exploring to raise capital, and I'm
Mm-hmm.
excited about it. But I was that person of that.
Yeah, and so we just got a question on the Q&A box, so make sure you guys are throwing them in there. But how much is a typical first investment and for what percentage of the company?
Thank you. Okay, so a typical first investment, that all depends on one, their valuation. But if you're saying like for us, like our average check size, our check size are between anywhere from like 150 to 500,000. So that's like our check size range.
And
But as far as, oh, go ahead.
I was gonna say for angels or like things like that, sometimes it's like 10 to 50. So it just depends.
Yes. Yeah, 10,000, 25,000, 50,000 is high up. You may see 100,000 for an angel investment. So yeah, for angel investors, you'll see in that those price range, those I would say number range, as far as how much people will invest. But at the end of the day, people are investing according to the value that they see in the business.
Absolutely. So we got another one.
Oh,
What are things you look for in an applicant?
Things that I look for in an applicant, well, like I said, our fund, first and foremost, we're servicing women of color. So that's definitely the criteria. Second, in our investment criteria, you need to be revenue generating already 100,000 annually. Now, I will say that there are a couple exceptions. In the tech industry, we do make some exceptions. And the reason why, you need a lot of that capital in order to produce whatever this, proprietary product is that you're building. So you want to make sure that you have that. But what they are showing is, of course, some type of proof of concept. They're showing an MVP, a minimum viable product. They are showing something that makes sense for somebody to say, oh, this is a good investment. They're not just presenting an idea by any means. They're showing something that makes it, oh, you know what? They're going somewhere with this. They have a lot of traction. Their email list is extremely large. They've proven product market fit already. They have surveys. They have something there to show. In addition, we also look for, like I said, a great marriage. We want to make sure that we have resources outside of capital in order to support you. Because, our desire is for you to be successful. So it's one thing just to invest capital into you, but no, we need to be able to provide resources to help you grow and scale this business too. So definitely we look to see what our LPs, what resources they have. LP, for the sake of this conversation, you guys, well, not for the sake of the conversation, but an LP is a limited partner. These are people, in addition to our general partners, myself, Keisha, and Ayana, who've invested in the fund. These are people who've invested in the fund. So we want to make sure that, their resources are being tapped into. These people come from various walks of life and they have a lot to offer. So we want to make sure that's in alignment, that there's something there in addition to the capital that we have to be able to support you. So those are definitely things that we look for in an applicant. But yeah, that's it from a high level standpoint. Our investment criteria is listed on on the website, fearless.fund. And I also wanted to say this other thing. At the end of the day, we're not just investing in the product or the company, we're investing in the person. So we are looking for somebody who has that kind of grit, who has that wherewithal. Being an entrepreneur, as Jaclyn can definitely testify, much. So you want to make sure when something like a pandemic hits, are you going to be able to keep pressing through? Are you not going to fall on the floor and just be like, I'm checking out? So we want to make sure those types of characteristics are there. But on the paper, at the end of the day, I'm going to tell you there's two things that will probably win you over in a room when you're talking to investors and when you're going to pitch. Your brand story and your numbers. Those are probably the two things that are going to grab everybody. A great brand story is what we know is going to sell you guys. If it's like a business that's catered to the consumers, we know that people are going to join on the journey. They're going to root for you. They're going to be involved in this. And at the end of the day, when you have the brand story and the numbers, you usually catch somebody's attention really quick. Of course, there's a high level of diligence that goes through investing, but those two things usually catch people's attention right off the bat.
Yes, diligence is a huge piece of it. Okay, so I'm going to go back to the questions from Hello Alice. But please, guys, drop in your questions in the Q&A box. We are pivoting and scaling our service-based business by expanding distribution through our website and app in the next several months. We are funding its development through loans, but we'll need a marketing campaign once it's available that will require more funding. At what stage in this process do we seek venture capital?
That person, I remember, was already even in business. They can start right now. I was like, no, you need to get your deck together and you need to start presenting right now. You're already in business, so you already have proven numbers. You already pretty much knows, okay, who your customer is, what works, what you're selling to them. You have some type of ground floor that you can just start moving in that direction to start pitching to venture capitalists. Now, there is no, I guess you would say, magic number or anything of that nature. There are people who will talk to you at an idea stage. There are people who will talk to you at, like I said, more like a later stage. I would definitely say that I encourage you to have some type of minimum viable product. You want to have something where you can show that it works, can show that it can be proven, can show that there's a market there that wants to purchase that. You want to at least be in those stages. But at the end of the day, there's like no rule that says, oh, you can't approach a venture capital investor until you're here. That's not true. If you're like, hey, I'm building the next big Facebook, I'm building the next big Uber. You need to go ahead and you need to start having conversations. People will believe in your vision at a pre-seed level when you're just even asking friends and family.
Mm.
So there's no like magic number that says you have to go wait to this and then you can go start pitching.
Totally agree with everything you're saying. This one just came in, which I think is a great
But
one. When do you think founders
that's a
should
good one.
not consider venture capital?
I love that. And I love it for the reason that I tell everybody all the time, venture is not for everybody. At the end of the day, you may just be running a business where you just need more cash flow, like cash flow management help from month to month. That is a loan. That is not a venture investment. And I
Mm.
say that because, as stated in the beginning, we are looking at companies that can scale and grow at a rapid rate within a certain window. And the reason why everybody's looking within a window, because funds have a life cycle. And the average life cycle of a fund is 10 years. So we're not looking for you to pay us back over 20 years. You're not buying a house from us, you know. We're looking within a certain window. So we want to make sure that you fall in that range. So those are the times when I'm like, oh no, there are people who apply and I'm like, oh, you just need debt-based financing. Just go to the bank and get a loan. And now if you're
Mm.
having trouble getting a loan, portfolio company that we did invest in that helps women with non-predatory lenders. So we're like, okay, we'll go over here. So we can really redirect those people to other places. But yes, there are times when no, venture is not for you. And right now people get so caught up in, oh, so-and-so just raised such and so just raised such and such. And but you know what? You have to pay that back. So while everybody is so caught up in the raises and so caught up in the whole sexiness of entrepreneurship, there's an obligation that comes with that raise. So just be mindful. You're like, oh, I got to figure out my exit because this 8 million I just raised has to get paid back with, and of course they want a return on their investment.
Mm.
So you also want to be mindful of how much equity, you're willing to give up of your business. You want to be mindful of, is this really a venture fit, or do you just need to go get a loan? Or do you just need to go get more sales? There are times when it's not either one of those two. You just may need to adjust your business model a little bit more. So yes.
Totally. And actually, I saw a founder that I know and love post something today. It was like she just raised $125 million, but she's like, don't worry, guys, I'm still broke. And I'm like, it's true. It's
Oh
so
my,
true. You
right.
get these headlines.
That is so crazy. Because I don't want to reveal this person. That I was talking to a girlfriend. I would say that was her case today, and I asked her about like her acquisition, and she said, "Oh, Arian, my check size still can't even invest in your fund just yet." And I was just like, "Oh gosh!" And now this person has raised a little bit north of that, a little bit north of the 100 million, and has had an acquisition at that. So that I'm so glad that that's being discussed too, because so often people hear numbers and think that, and you're like, no, the business made that. That doesn't mean that's what's in my pocket. Like, you've got to be kidding me. Like, that person has over 300 employees they have to pay. So yeah, growing businesses, and you hear these big numbers. Yeah, I had another girlfriend that ran into that. Somebody in her firm was like, can you loan me $1 million? And she was just like, from where? She was like, the company or from me?
Oh man, yeah, but and also that's an important conversation for. I mean, again, I could talk to you forever, but an important conversation to have. And I think I had a little bit on a podcast episode, but about liquidity for founders and making sure that that's something that you focus on your journey. Obviously, not like day one, but okay. I run a wellness-based business. I need more funds to pivot by adding more products and eliminating the products that are not selling. What should my next step be?
Oh, I love this one. When you're in these types of spaces and you have a product and you already have clientele, you're in a good place because you can always test something. So what I pretty much gave her was like the Bootstrap Method, hands down. This is not necessarily a situation where you need to go get a factor, and a factor is somebody who like will front a purchase order for you. This is not a situation where you need to necessarily talk to a venture capitalist. This is just basic bootstrapping 101, which is this. You have a product line, you put out a mock of whatever this new product is you want to just test to the market or you want to sell to them, and you do a pre-order. So I'll use a basic, very elementary example. Say you're selling t-shirts. This person is not. They're doing wellness products. but you have a t-shirt line, right? You go to Fiverr, Fiverr.com, get somebody for $5 to mock you up the shirt, right? So you don't even have to pay for this to be in hand. You've spent $5, right? You put the mock-up up and you say, hey, I'm doing pre-orders during these dates, and you just see if your audience bites. If they start buying and they start biting from it, what you do is you take the money that you've generated off the sales, then to go fund the production of that shirt. Same thing with the wellness products. So say if it's, a new body scrub that's coming out, she puts it out there, puts an image of it, say, hey, I'm doing pre-orders on this. These are the benefits. This is how this is going to work well for you. And you see if it bites. This is the beauty of the whole pre-order model and method, is that if it doesn't, you haven't invested anything in it and you can just start over from scratch. If it hits, you pretty much can assess where this demand is. And this is very important because sometimes you may undersell yourself. You may say, you know what? I'm just going to go buy the minimum quantity. It's just only 200 units I have to do. And next thing you know, you're looking like, well, I just sold 350. You would have undersold yourself. So when somebody like that decision of trying to expand products, get rid of products, I'm always like, hey, test it out with some pre-orders and you can really see and hone in on what's going to work and what people are buying.
I hope you guys are taking notes. Pre-order, genius, so smart. And I also, from that, it's a great thing for investors. If you have pre-orders of 1,000 orders, I mean, that looks really good to a potential investor. So it's a great way to kind of kickstart a conversation. So make sure you guys are dropping in your questions. We only have like a few minutes left, so I want to get to all of them. But okay, again, from the Hello Alice community. I am a plant-based chef and active at local farmer markets during COVID-19. Knowing these times have been tough on the restaurant business, I'd like to open a grab-and-go storefront. How can I start raising funds to get this started?
I like that. I like that. Oh gosh, I can't even say it on here. I just have to remember where something I've signed that says confidentiality, but I like that. I'll start there. I like that. So one, I would just start looking at, I don't know if you are a woman of color, apply. I'll say that much, but I would say that start just seeing who is in the space that's already investing in similar business models. That's always first and foremost. It's back to the whole, where does the marriage lie? I know we definitely have some activity in a space like that. So I would definitely say, that's why I said apply, but you definitely want to check to see who's already supporting things of that nature. Now, where you are in a situation, I don't want to say every adversity brings opportunity. So I would say a benefit. So due to COVID-19, there are people who are paying out grants and different things of that nature that support, okay, what are the new COVID type business models that are coming out that we can be of support to? So I would say you would want to see some COVID-19 grants, and definitely as far as on the VC front, see anybody who's already in the space that are investing in that area, because they probably know, okay, what does that need to look like on your end? Yeah.
Yeah, and I think that's an interesting opportunity right now, knowing that restaurants are closing, everyone's staying home. What can you create that's not a huge rental? You don't need a huge restaurant, but it's just a grab and go situation that you can be doing takeout. Maybe you bring a few partners in on it with you. I think that's going to be the future, honestly, because a lot of those places don't exist. Everyone has these gorgeous, massive restaurants. And I think this is, again, like to your point, an opportunity. Okay, so we have a question that came in. Okay, how often do you guys consider applicants at the Fearless Fund?
Oh gosh. How often they come in every day. So we every month, myself, Keisha and Ayana, who are on the GP, we've allotted time out for virtual pitches, but they come in every day. So just feel free to apply. It's not like there's a window of applications where you have to, get in by this date. But yeah, just feel free to apply at any time. They're looked at daily. And, when we see something that's like, we're like, okay, they're probably ripe for investment, we schedule for a pitch meeting.
Absolutely. And so this is a good question, kind of flipping it a little bit. What should you look for in investors, angel, early stage, et cetera, to know if they're the right fit? So we talked already a little bit about what you guys look for, but what should people be looking for in their investors?
Yes, that is good. You need to definitely look, like I said, for people who can offer you more than just capital. So when you're looking for investors, you want to make sure that, oh, I know we're industry agnostic, but we do have a strong area of CPG. So you like your products, consumer packaged goods, beauty, tech. You definitely want to, even food and beverage, you want to make sure that these are people who have resources for you that are outside of capital. In addition, like at our fund, we have a very large celebrity network. So if somebody's looking for resources in that area, they're like, oh, we know we can tap into their network as far as different celebrity endorsements and different influencer marketing campaigns. In addition, we also know that we're very big on mentorship. It's like, okay, if you're in this industry, we want to be able to pair you up with somebody who's successful in the industry as well, too.
That's exactly right. And I love that you even said, like, you know, we've CPG, we have the celebrity network, because really those people, the LPs that are part of Fearless Fund, are invested in your company. You know, like they want to help you in that way. So I think that's really important too. And there's so many different you know, amazing things like the mentorship piece that you guys are offering, which a lot of people do not, and there's so much importance there as well. Okay, final question. But if you guys throw one in, maybe I'll get to it. I pivoted my sewing business to make masks and gowns during COVID-19 and have exhausted our donation money and supplies. Are there grants or programs available to help small, independently owned businesses who are struggling to keep afloat?
Yes, right now there are definitely grants out there. Typically, like I say, the grant world was very heavy nonprofit space, but right now, due to pandemics and just so much going on in the world,
Mm-hmm.
people are out. So what I've even done, like we've even just compiled a list of everybody's news announcements. Anytime somebody makes an announcement that they're supporting a certain sector or demographic, I know like lately with so much civil unrest in the Black communities, there's been so many companies stepping up saying, hey, we're going to put our dollars here and we're going to do this. We've definitely compiled these lists. So I would, right now, you can watch the news and pretty much pull them. Before, it wasn't as accessible. I will say that. I
Yes.
mean, getting grants and grant writers on board was just like a freaking struggle overall. Like it was hard, excuse my French, but just hard as hell. But right now, there's just way more opportunities. And luckily, like I said, the world is listening. You
Mm-hmm.
know, there's definitely options that you have in the grant space. So yeah, I would encourage you to definitely check.
And also, I will just say this little plug for us, but our Beauty and Self Care Summit is July 25th, and we are giving away $10,000 to businesses in the health, wellness, and beauty space. So if that is you know, something that you fall into, which is pretty vague, you can apply, and you just have to live pitch in front of amazing judges. Arian's been a judge before. Well, thank you so much. Before we conclude today's session, I want to thank you all for tuning into Mastercard's live Priceless Conversations with us every week and joining us along the journey as we navigate the new normal. Arian, I mean, you're amazing. We have a podcast episode coming out. Trust me, it is a not to miss. Like it is, she is just incredible.
Oh,
And we will be skipping next week, but we'll be back July 15th, and I will be chatting with Sally Krawcheck of Elevest. She's also amazing. And if you'd like to ask any
I
questions
love
online to her, don't forget to check out the Hello Alice Business for All community by visiting the Hello Alice website. You can ask those questions, she'll answer it, and then we'll bring them to you live here on the Create and Cultivate Instagram. Also, Arian, I want to just talk about your book. Can you plug your book real quick and tell us a little bit about that?
Oh, thank you so much. I have a book coming out, you guys, called The Fearless Money Mindset. It's available on Amazon right now for pre-order, and it's awesome. I appreciate you.
Oh, I appreciate you. If you have not pre-ordered this book, do it right now. I mean, just the snippets I've heard, it changes your whole mindset on money. And I mean, you're just incredible. And also, let's just tell everyone where your hat is from, just so we can address those questions.
Off and on the runway. Off and on the runway.
I love it.
Yes.
Amazing. You're an angel. So good to chat as always. And thank you everyone for tuning in. Bye,
Thank
guys.
you.